Good morning. Welcome to my YouTube channel and Phil's Gang radio show. Please, during this presentation, I really appreciate it if you hit subscribe, like, and share. Remember, you catch my national radio show, 3 o'clock Eastern every day. Okay, so everybody's saying that the bottom's in. Everything's fine again. The bottom's in. We're on our way. We're going to make new highs. Okay, we're going to get all the way back up to this area right here, they're saying. Okay, we're going to get right back up to where we had the peak in January 2022. We're going to go from here back up to here. Everything's all set now. Really. Anytime you listen to people on CNBC or Fox Business or Bloomberg, you're listening to dopes. These are dopes, okay? I'm telling you, if you listen to them, you're going to continue to lose money. This is nothing but the big institutions who've been shorting the market, and then they buy their shares back. Shorting, buy their shares back, shorting, buy their shares back. This is not new money coming in. And I can prove that by showing you the interest rates. Interest rates are everything, okay? So let's take a look at this chart right here. Now, this shows you clearly, okay, if you go back to 1995, you go back to 70s, look what happened to the rates. Now, let's talk about what rates I'm talking about. The Fed fund rate, not the 10-year Treasury. The Fed fund rate. Those are the rates that the banks, the Federal Reserve, charges your bank, okay? And they've been at 0, okay? And now they're between 6 weeks ago, they raised them again, and now they're between 3.5 to 4. But that's not enough to break the back of inflation, okay? If you look back here, Paul Volcker in the 70s, remember interest rates had to go up to 18% to finally break the back of inflation. Look what happened. Now, interest rates started to drop down to near 0%, right? Okay, and that's when we had our big boom in the stock market, all right? And if I overlay this, okay, here's our market came down here 2008, right? The rates were still coming down right in here. First they rallied a little bit, then came down. And that starts right here, okay, right here. And you see how, because the rates were down, all QE, the market went up. All right. So what moves the market is not earnings, is not PE ratios, not price to sales, price to books, not free cash flow. Used to, but that's out the window. What moves this market, if you take a look at the market from here all the way up to, as I said, 2022, January, then it collapsed. All right. Now, remember, we had a collapse in 2018 because the yields were getting too high. We had a collapse in 2020 because the Fed fund rates were getting too high. Okay. When the Fed fund rates were getting too high and the Fed fund rates getting too high, the market crashes. That's what happens. Okay. But then they dropped those Fed fund rates and look at this. Whoa. And then all of a sudden they stopped with the Fed fund rates. No more 0 rates. Now we're at 3. We went from 0 to now 4%, 3.5 to 4%, and see what happened. So every time the Fed fund rates go up, the market crashes, okay? So when we had all this inflation back here, they had to raise the Fed fund rates, okay, that were normally around 4 to 5%. They moved the Fed fund rates up to about 15. Yeah, 15. Imagine that. I know. I lived back there. I remember, believe me, my house mortgage was almost 17%. So, but now when the rates drop, and you can see this little bit of an overlay, when rates dropped, look what happened. Okay, right? Rates dropped, good things happened. We had the dot-com rally, we had the big housing rally, and then we had the QE rally right here. But now that is over with, okay? So now the rates are going to start starting to go back up, just like they did back here to fight inflation. See it? The only way you fight inflation, you got to raise rates. But they haven't been raising them aggressively like they did back here, like Volcker did back here in the 70s, right from here all the way up to here. the Fed fund rates, I think Ben was, I had to check it, but I think it was around 12%, even higher, 15%. But look, he accomplished breaking the back of inflation, and then we had the big boom. But this was all fake. This was all fake. This was all driven on zero money, on zero rate money. The Fed was loaning money to your bank free. Okay? Of course, things were going to be booming. But take a look here now, today. This is what you got to worry about today. They're starting to raise rates again. Now the Fed fund rate went from 0. Now we're between 3.5 and 4, and they're going to bring it up to about 5, 6, 7%. And that's why this is going to do this over here. So the more they bring the Fed fund rates up, the more the market's going to pull back to where it was right here, and then go down another 20%. As far as reaching a peak right here, where they're going to hit and fail. Remember, failed. They'll fail again. Okay, you can't have this breakout and rally and get back to this point here. Okay, with rates, Fed fund rates going up. We're already at 4%. We're going to go higher than that. So we're taking advantage of it, our gang. We're taking advantage of these of these rallies. Okay. We've been in the right stocks, we've been in the right sectors, and that's what you have to do. But more important than that, you got to learn how to sell short. Okay, sell short. So when the market goes down, you're making money. If all you can do is buy stocks, anybody can do that. But on the way down, you got to learn how to sell short. And we'll show you that. Just go to my site, philsgang.com. Okay, hit where it says get started. We have what we call the Working Investor Group. You're in there for free for 10 days, and you'll learn how to short over 10 days, okay? And it's not costing you. Now, if you decide to stay with us, that's great. But you gotta learn how to sell short, okay? So that's why, again, as long as the Fed fund rate's going up, the market's going to continue to go down. It's not going to come all the way back up to where we're here in January. And you're being told that now. You're being told that the market is going to come right back to here. They're saying the market's going to go from here right back up. Really? When over here they're not telling you the truth. They're not telling you about the Fed fund rates, how those are starting to climb. That's what you watch right there, okay? And that will give you your answer. What do you think the market's going to do by watching the Fed fund rates? Continue to watch me every day, and please join my gang, philsgang.com, free for 10 days, okay? See you on the charts.